Welcome back, my awesome people. In today's episode, I am honored to interview Dr. Crawford, who is the Executive Vice President of Alger. If you haven't heard of Alger, guess what? You are about to find out today and why you should invest through them, whether it's ETFs, mutual funds, stocks, any type of vehicle. So stay tuned and we will find out more. So, Dr. Crawford, how are you doing today?
Great and so fun and exciting to be here with you.
I am so happy. I know you are a very busy person, especially now that the fall quarter is coming up. But thank you for sitting here with me and diving deeper into Alger and yourself, especially being a vice president in this massive field of finance. So let's get right into it. So, Doctor, can you tell us a little bit about yourself, your history, and your position at Alger?
Yeah, so I guess where do I start? I'll start from the very beginning. I was born here in Manhattan, Kansas, of all places, for all the Kansas State people. And I moved to the Middle East when I was 5 and was sent to boarding schools in the Himalayas about when I was 6. And so
Wow.
grew up in India. By the time I was 12, I think I had gone to 25 different countries and really explored a majority of the world. Um, I grew up when I was 12, I moved back to Buffalo, New York, and lived the duration of my childhood there, and my parents still live there. But I think I tell you that because I think it just gives a very broad and interesting and different perspective on how I view the world. After that, I went and got a degree in mechanical engineering from Berkeley, University of California at Berkeley, and then proceeded to get a master's and a PhD at Stanford University in material science and engineering as well. So, that's my educational history. I joined Alger right after my education was complete and I got my PhD. And I've been here ever since. So I've been here now. This is my 20th year. And it's really the only job I've ever had.
That is amazing. And just the fact that you have been able to travel pretty much all over the world at such a young age does give you a different perspective and overview. And especially in this role that you're in, when you're dealing with economics, you're dealing with finance, stocks, mutual funds, and this world where global pretty much knowledge is pretty much mandatory. It really does give a good glimpse into your history. So thank you for that. And so since you have been at Alger, can you provide an overview of their history, their core mission?
Yeah, so Alger has been really a pioneer of growth investing. And it was started 60 years ago by a man named Fred Alger. Whereas it seems commonplace today to be investing in growth, I think in his time, growth investing was really Fred Alger's brainchild. And one of the reasons I so, wholeheartedly believe in growth investing and our philosophy in particular for looking for change, is because it has been tested through many different decades, many different economic backdrops, many recessions, many presidencies, many portfolio managers, many teams. And there's been a long-term resiliency to the performance. So I am a wholehearted believer in our philosophy, and it's core in what we do. Just in mentioning the history of Alger, I think we cannot have a conversation about the history without mentioning 9/11. Alger was one of the companies that were in the World Trade Centers and lost almost all of the research staff on 9/11.
Wow.
And, the company had to be rebuilt. It was thriving at that point and lost a lot of assets and really had to rise from the ashes under the tutelage and guidance of our current CEO. So, that is, I mentioned that because I think it's part of who we are culturally, of kind of understanding that we stand on the shoulders of many, many amazing investors that came before us that are no longer with us today.
It's just my condolences. It was a rough time during that time of 9/11 where, I can only imagine you've built a company, you have amazing staff, an amazing team, and something catastrophic like that happening, pretty much wiping out what you've started and then having to rebuild. It's like the rise of the Phoenix for those comic book lovers. It's sorry, it is, coming from the ashes, something horrible happens and you don't give up and you continue building. So thank you for that memoriam. Back to what you were saying when it comes to growth, I think a lot of firms these days are focused on options plays, dividend plays, and trying to give the customer or the client a return on their investment right away without that patience of growth. Because who knew Amazon, can go from selling books to now becoming the number one, tech giant almost in the world. So as a growth play, everybody who invested in Amazon during those early years definitely got what they deserved. And those that, didn't think of Amazon because it didn't provide a dividend, they kind of missed out. So I do love that Alger's philosophy of growth focus. So since we're on the topic of growth focused investments, what are some of your products and services? I know I've been looking at your suite. You guys have mutual funds, ETFs, very range going from small cap to large cap. Can you talk more about your products and your services?
Yeah, so again, we are an active growth equity investor that have a varying number of products from small cap to mid cap, international, emerging markets, and of course the products that I'm part of and I run, which are our large cap suite of products. We have actively been trying to diversify these products from mutual funds to ETF structures because that's really what our clients were asking for in terms of, both tax efficiency um, you know, uh, as well as like where the market was going. So, we are one that look for change in the companies that we own, but are also willing to pivot ourselves to meet the market where they're at. So, if you think about all of our products, that the interesting thing also is that we all look at this market with a similar filter of looking for change, looking for dynamic change, looking for industries and markets and companies that are really dominant players that are going to become great stocks, not only just good companies.
I definitely agree. I know many investors. I always tell my viewers there's two types of investors. The ones that don't do their research, they just kind of put their money into a stock and hope it wins. And then those that actually do the due diligence, they focus on the earnings, the numbers, and then they invest. So exactly as you said, right? It's the products that you own, it's not just a gamble. You've done the due diligence, you know exactly what you're actually investing in. I've actually spoken to a few CEOs the past few months where I would ask them about an ETF and they actually didn't know what was in the ETF. So it was kind of funny, but it's actually good to hear that the management actually knows what they're doing. And so that's good to hear from Alger's point of view. And so, what would you say is, let's say, your top three, I guess, main staples for Alger, or maybe just if there's only one main staple, if you would like to mention, and the
Yeah,
ticker symbol.
yeah, sure. So I think one of the ones that I am most excited about at this moment is a new ETF that I just launched. It's called Concentrated Equity, CN for concentrated, and EQ for equity.
Nice.
And I think it's actually like one of the most exciting products we have launched, in part because it is a ETF. So you have the tax efficiency of an ETF. You get the philosophy of our large cap growth mandate and our filter of looking for change in a more concentrated portfolio of 20 to 30 stocks. And that's really exciting because really one of the things that we are very good at is picking stocks. As you mentioned, Jacob, we do a lot of very deep due diligence. Probably we know our companies better than most on the street, I would say. and having the conviction to take on positions in a more concentrated portfolio where they can really drive performance is one that's really exciting for our clients. So, that's one that I'm particularly excited to have launched. Again, that's CNEQ is the ticker.
CNEQ. My viewers, I will have that in the description box below. And you can't really go wrong with large cap, especially in this day and age where many large cap companies are, they did fall a few years ago during, lockdowns, but now they're again on the rise, breaking records, breaking all-time highs. How do you differentiate Alger from other firms?
I think, look, I've only worked at Alger, so I don't know how other firms really work. But one thing that is very clear is Alger has one focus, and that focus is growth and looking for dynamic change in the markets. And we're a boutique shop that only looks at growth and only invests in growth. So our filter is very defined and again, been time tested through many years. I think other firms, you might see style drift sometimes, depending on the market. In some instances, other firms come from a multi-strat kind of basis, or where they may have an ETF as well as active management, and you get a competition between the two, or the bond portion of the business is competing with the equity portion, and there's not necessarily any kind of like consistent investment philosophy on the equity portion. So I think there's all different flavors, and it's not that one is better than the other. It's just I find what Alger does, investing as a boutique growth manager, quite simple. And it's an easy story to tell and an easy look. It's interesting because as I look outside my office, all of us speak the same language, because we were all kind of born of the same philosophy. And that's important because I have, 50 other investors that I can have a conversation with at any point in time, and a very intelligent conversation. So I think that's an important aspect of why Alger is so different. I would also highlight we're willing to disrupt ourselves, and we're willing to kind of take shots on things that may seem risky, and in part because Alger is a is privately owned, and the owners have been very generous at allowing the company to really take different kind of trajectories for growth, whether that's acquiring new talent or acquiring new businesses to latch on.
You said it perfectly because who you work with actually matters so much because you can as you said, right? You have the bonds people maybe competing with the ETF people competing with the mutual fund people. So there is no unity or cohesiveness. I know one thing when it comes to places like, especially in the finance world, ego plays a big role, right? Especially when you're working in collaboration in a group, one or two people might think, oh, I know it all, you listen to me. Whereas I know many successful firms, they all have the exact same game plan, same philosophy, same style. And as you just said, right, everybody in your office speaks the same language, has the same philosophy, and you guys are all on the same page. So that way, if one person goes left, the whole team goes left. It's not everybody for themselves. So thank you for that. That's actually a really good point. And that is something that I do believe Alger does differentiate itself from other firms. So with your amazing management team, when you are, for example, choosing key sectors or industries, what do you look for? I know some firms, they're all about tech. Some firms are all about healthcare, utilities. What does Alger focus on? I know you guys have a broad range of products, but what would be, I would say, your focus?
So, I would say the focus again for Alger is looking for change. That is the philosophy. We look for change in companies. So these are what we call positive life cycle change, where they're companies that are maybe they've matured already, and they have to cross the chasm. And this would be like Microsoft when Satya Nadella took over,
Mm.
where people thought it was a company that was going to zero because no one else was going to use their software, and Google was coming to get them. with Google
Wow.
Docs, right? And look what they've become, right? In part because there was a management change that really took the helm of this company and turned it around. That's a positive life cycle change. And they successfully and highly successfully have crossed the chasm.
They really have because where did Google Doc all of a sudden come out of? It's not like Google created it. They definitely bought out a much smaller company that had a vision that had definitely a proprietary type of technology that the bigger giants wanted. And so for Alger, that is actually amazing to hear because I'm going to assume here, but many of your companies, whether it's small, mid, or large, are pretty much kind of like under the radar. They might have great revenue, great earn. They're doing amazing, but they're just not, that fun, spicy stock that you can trade every single day that, most people like to see, right? But your returns and your gains will be maximized. And so when,
But can I just add one
of
thing to
course, of
that? So
course.
that's only one leg of our philosophy, Jacob.
Mm.
The other leg is, in fact, the higher growth vehicles. And, I would like, and I hate to be trite about this, like an NVIDIA, you know, where, it is a company that not only went through this big life cycle change in that but it created so much demand for the product that they made. They became a market dominant company. When we started buying NVIDIA, I think our cost basis was like 1/5 or 1/6 of where the stock is trading today, in part because we had done the work to understand that this was going to have a massive growth trajectory ahead of it. So we have two pillars of our philosophy that kind of center around big change. And it's not that all of these companies are in tech, and we don't think of it as an industry. So will we never own utilities? There was a long time we didn't own a utility.
Oh,
But with data centers right now, for example, the utility landscape is changing, and we own a utility called Constellation Energy.
because of the
They are
electricity
seeing
use.
for electricity use, and they're a nuclear provider of energy. And they're seeing immense amount of pricing power as we go through the next 5 years. So I think that the way that we like to think about it is not necessarily we won't invest in certain sectors because they're not deemed growthy enough. But I would say that perhaps we don't invest in sectors that don't grow or don't change. A great example of this might be staples. We're underweight staples. We're underweight consumer discretionary, in part because maybe the change there is negative. I would argue for a lot of brick and mortar retailers, that's a negative change over time.
It is
But
because the landscape is changing, as you said, right? Not many, like brick and mortar, we saw the past few years that even the top brick and mortar stores were shutting down due to the climate. And so, yeah, you're absolutely right. So your two philosophies, I would say, is one is change. Can you make a change? And the next is definitely growth. So change and growth would be the two main philosophies for your model. Am I correct in saying that?
yeah, I would word it a little bit different. I would
Oh,
say there is two different kinds of change that we look for. So change will be whether your growth or you're kind of crossing the chasm type type business like the Microsoft, but both of those are change. The core
okay.
of it is change. One of them leads to very high growth on the top line and then bottom line follows. And the other usually sees a growth in the top line that's a little bit slower as the company crosses the chasm, but also allows for immense amounts of cash flow and earnings growth, and the multiple usually expands alongside with it, both of which are recipes of success.
That is excellent to say. That is actually a very, very good point. So thank you for elaborating on that and clarifying because, when most people think of change, they just think, oh, okay, that thing just changed from one thing to another, when really there's different branches even in the umbrella of change. So that will actually lead us into the next point. So in regards to, change and diversity and so on, you yourself have actually been a very accomplished champion for many causes, especially in, for example, 2022, you were named the See It, Be It role model by Investment News. And in 2020, you were recognized as the top woman in asset management by Money Management Executive. So with all these accomplishments, can you elaborate what these mean not only to you, but to also the future of Alger?
Yeah, look, I'm first of all very honored to have been recognized by these financial publications, and in part because um, being a mentor and a female role model for our younger generation has been a kind of personal passion project for me. And trying to increase the diversity has been a passion project for me. And so, we need more diversity in finance. It's ridiculous. I mean, I was just telling Scott that, you know, oh, Scott's not on here. So I will. So I was, I was just given the statistic that, out of 1,200 large cap funds, we only eight are run by women or a team of women.
Wow.
And it is really troublesome to me to see that kind of statistic because we need to change the odds of success for women and minorities. And it's one of the reasons I started concentrated equity, again, that ticker CNEQ, because I felt like we have to change that in our industry. I've met many, many brilliant women investors. We just need more of us.
I agree. And so, from your personal and professional opinion, why is that? Are women kind of not having the opportunities to get into finance? Are they kind of, as they're growing up, everyone's telling them, no, don't get into finance. Money is for men. And you know what I mean? So why aren't women getting into this field? Is there like a ceiling? Is there something kind of stopping them from getting there?
Yeah, Jacob, I don't know. I can tell you, I have three kids, two of which are kind of teenage girls. And I wonder if it will be different for their generation because, they're brought up to be much more vocal than, for example, I was. I told you I grew up in the Middle East and in India. And so is it a communication thing? I don't know. Oftentimes, what I hear back as feedback from young women that decide to leave the industry is that, they don't, they don't understand the communication style
Okay.
where, or so there's a communication differential, or they feel intimidated to be the only one at the table that's a female.
Uh,
Or and because of that, they just feel different and they never feel like they're part of the team. Not the team as in work, but you go to conferences and you're the only a woman in a sea of um, of males.
Men.
It
Yeah.
is, I think it can be very intimidating and you feel different. Um, so I don't know what the answer is. All I do know is that if we don't have female leaders really in positions of visibility, they can never dream about how it can change. And so it is very important to me that, for our children, we change that. So it's not a female investor, it is an investor, who happens to be female.
I agree. Because anytime, from what I've seen, is similar to, the engineering department. You will see, maybe three or four females in a room in a lecture hall of, 400 or 500 men. And I have spoken to other female execs, and I guess their opinion on this issue is exposure and opportunity. When girls are growing up, society or maybe parents or school or whatever the other external factor is, they kind of push them in a certain direction and then push boys in a certain direction. And then, it kind of creates this society as adults of men do this and women do this. But I think so. Just to elaborate on your CENQ, the stocks that you put into that ETF, is it companies that have more female visibility, more minority visibility? Would you like to elaborate on that ETF? Because I
Oh,
think it's really interesting.
yeah, that would actually be a great idea, Jacob, to have like an ETF that was focused on minority or female-led businesses. But no, CNEQ, concentrated equity, is not that the focus of that is not
Oh,
um,
okay.
kind of minority and women-owned businesses. It is investing again with the same filter of our philosophy investing in the best businesses, oftentimes oligopolies or dare I say monopolies in the portfolio because, those are the businesses that actually thrive through all economic environments. They
Yeah,
have incredible amounts of pricing power. Their margins and their free cash flows are market leading historically. And so I would say about 50 to 60% of the names in that portfolio will have kind of a monopoly or oligopoly type perspective or type characteristic. And like examples of that are Taiwan Semiconductor,
nice.
one of probably the most strategic business on this planet.
And it's also the hottest issue globally right now, too.
That's right. And what I find really interesting is that it doesn't even trade at a market multiple. Yet it is going to soon be a natural monopoly.
It has to be. I mean, everything that we use and own comes from the semiconductors. And I know during the lockdowns, that was the reason why cars could not be developed because there was a shortage. And even to your NVIDIA point, one of the main reasons why NVIDIA exploded was because of the gaming industry. And the NVIDIA chip is so, I guess, exclusive to these new high performing games, PCs, consoles, that Nvidia had no choice but to start ramping up their manufacturing, which is amazing. And so when you are looking at these type of companies, they might have amazing future prospect. If along the way something happens to that company, what is the pivot? How quickly can Alger or your portfolio managers or yourself, how quick can you pivot, change it up so that way you can still maximize the gains?
Yeah, you know what? We are not locked into anything. And so, the positions in our portfolio are tied to our convictions. So if our conviction varies or our conviction kind of wobbles, we have the ability and we will start, reducing our exposure to that business. Or it could be for another reason, and that the stock price ran up to where we thought it was more fairly valued.
Okay.
Or yeah, so there's many examples of this where we can pivot to a lower position or it comes out of the portfolio because we want to reduce the exposure. But I think one of the things I would say is that the portfolio construction is in fact very important because you're always going to need some of these companies like a Taiwan Semi, but you're also going to need companies that have a different characteristic in terms of how they behave. And I'll give you two examples of companies. One of them is Formula One, which
Oh
is a
yeah.
media company. Really interesting dynamic change occurring with Formula One. And then Ferrari, where no one can argue that Ferrari is not a monopoly in its price point.
Oh, it is. It's a beautiful industry.
Beautiful
Yeah.
industry. I mean, it's kind of mind-boggling, and I have learned more about cars with these two stocks than I ever knew. But those are very different characteristics than the traditional kind of NVIDIAs and TSMs of the world that offer growth, but not as much volatility per se.
It's different, right? That's what matters because the new generation of investors, I'm sure you know the retail investors, especially when we had that GameStop, AMC, debacle. The new investors, they want something that they're included in. So Ferrari, Formula One, semiconductors, these are things that the new generation, the new investors actually understand, compared to the previous generation investors who were more into the blue chip, the reliable, the I can have a steady income coming in compared to the I gotta buy now and I'll sell in 7 minutes.
But
uh,
Jacob, I think another thing that investors, I think, need to really embrace or uh, is that we are going through this ridiculous amount of change right now with artificial intelligence, specifically generative AI. And we're talking about NVIDIA. It's the Gen AI that made this business go boom. Gaming was the first leg of their story. It's the data center intelligence that we're building that NVIDIA is building the platform for. And so, it is wildly changing so many different industries in the market right now. It is wildly changing who can win and who can lose, to the point where one might ask whether Google search is going to get commoditized over time. Who
Yeah,
would have
good
thought
point.
that Google was a monopoly? Who would have thought that a monopoly would be able to get broken down? And so this is very exciting to us because, all of a sudden we can express our convictions in so many different ways, and not owning whole swaths of sectors that were loved by the market.
Definitely. It's a repeat of Y2K 2.0. Remember during Y2K, everything was scrambling. Who's going to be the internet king or queen? Everybody put their bets in. And as we can see, Amazon, Google, Microsoft, they emerged. And then, the companies that thought they were going to emerge, like Yahoo, didn't really, make the cut. But no, that's actually a very good point because we are in the next, I guess, evolution of the technology sector, right? Internet's kind of old news now. Now it's, can we have interactive internet where we can actually see what's happening instead of just viewing it, which is actually pretty cool. And so in the position that you're in, which I think is an amazing position, if other individual students, some of my viewers are in the university college level, if they wanted to become in your position, what was the type of journey that you took, like maybe certain high school courses or university, because you did say you have a mechanical engineering degree. Was there anything else that kind of made you get into finance? How come you didn't go into engineering, or was it just boring and
I think I got my PhD, and so I basically spent about 5 years in a room with a machine that was about as big as this room I'm sitting in right now, effectively rewiring and doing all the plumbing on it
oh my gosh.
to get my PhD completed. And after that, I thought, I am too social a person for me to be in a room, in a building, in a basement. So I realized I had to pivot. But um, I think the first thing I would say to anyone, it wasn't when I came to Alger, I knew nothing, Jacob. I really knew nothing about finance. I didn't understand what a share was. I didn't, and I remember the first day at work, my then boss like left me an income statement to build. And it said revenues, and it said profit, and then it said COGS. And I looked at it, I was like, oh my gosh, what have I done? And I called my husband crying. And I'm like, what have I done? What is this word COGS? I don't understand even the basics of what they're giving me to do. So that's where I started. So I hadn't taken a finance class, an economics class, but I intrinsically was curious.
And you're
I was,
resilient, right? You didn't understand something. So instead of quitting, you said, okay, let me figure it out. Let me actually, even if I had to take YouTube University or, Google searching all night long, you figured it out eventually. And it's actually really good to know that you don't need to have a finance background to become someone in finance, because I think finance, like, for example, myself, I am nowhere near finance in my personal career. However, I'm here doing finance. So, I guess both of us are in the same boat. And
yeah, I would also say that, you have to just have a passion for what you do.
yes,
And that curiosity and love for what you do is going to propel you to any heights, in whatever you do. So if you're starting young in your career, don't do it for the money. Don't do it for the title. Don't do it for, that it's a sexy job to have, because under the covers, none of the jobs are sexy.
I
They're all,
agree.
they're all hard, but in order to get through that difficulty and the periods of time where it's not that fun, it is imperative that you love what you do.
I
And
definitely agree. And were there any mentors that kind of helped you along the way? Not in the engineering sector, but more in finance, especially, it's a new industry, you're learning. Were there anybody that took you under their wing and said, okay, this is kind of what you do? How did that experience go?
yeah, so as I mentioned, I started in our Alger Research Associate program, and my first mentor here was a woman named Nam Wong, who, I've kept in touch with all these years. She's like a sister to me and really a life mentor still. And I have to mention our CEO, Dan Chung. who really found me on campus. I interviewed with him at the Stanford campus, and he didn't hold it against me that I didn't know a lick about finance. And he hired me and then really took me under his wing to make sure that I didn't get stuck on the hurdles that that you can get stuck on. Always has been a fantastic sounding board. So what I would say to everyone is that find yourself a sponsor as well as a mentor, someone who's really going to support you in your career path. And that really is what Dan Chung has been to me.
That is amazing because you have Dan Chung, who's a finance guru in the sector, and then he takes you under his wing, and look where you have become. You've become an amazing VP, and also you know exactly what you're doing when it comes to managing and creating portfolios. So another question on mentorship. This is something that I get all the time. What makes people want to mentor? What do they get out of it? For example, of course, there's the intrinsic value of, okay, this is rewarding, but is there something greater that a mentor gets other than that intrinsic value when he or she mentors?
Wow, that's a really good question, Jacob.
Oh, thank you.
I, you know,
Like, have you mentored yourself as well?
have I mentored myself?
Others.
Oh, yeah, for sure. I mean, look, my father was a professor.
Nice.
Yeah, and I was supposed to be a professor. And when I think about, being a professor, it's all about mentoring. It's all about teaching. I was a teaching assistant for through undergrad and graduate school, where I would mentor and teach the kids in the class. So for me, it's a very coming from an academic background, part of learning is also mentoring. So as I move forward and have moved forward in my career, it has always been important to me to make sure that our young people are appropriately mentored and they're learning. What do I get out of it? It's incredibly gratifying to see them grow, and it's almost like watching a tomato grow. You know,
Slow
where
and steady.
yeah, and it is like amazing to see when it clicks for them, and they're like, "Oh gosh, I get it now." And then take it on to whatever they might do in their life. And to have a positive impact in any way, shape, or form is incredibly gratifying and important to me as just a human being.
That
So
is,
I would say one more thing that I get out of it. Oftentimes, I learn from them. It's not a one-way street because they think about things differently. They have a different perspective. They have a different filter on life, and through that, I learn.
I definitely agree. Because I have a master's as well, but it's in education, and so I've done mentorships. I've done the whole professorship, TA, things like that, and I totally agree with you that mentorship. The reason I asked that question was because I just wanted to see, because everyone has a different opinion on it, and I loved your opinion because I have the exact same opinion where it is very gratifying knowing that you see someone go from say a two to go up to an eight, and that progression, that success, you're knowing it's like it's like training an athlete, right? You see them progress, and then they win that gold medal at the Olympics, and you are more happy for them than they are probably for themselves. So I agree, that's actually a really good point. So thank you for that, Dr. Crawford. Now when it comes to politics, okay, we're going to get into a little bit of politics. So a lot of CEOs that I've talked to, the elections is coming up, especially the American elections. I personally can't vote. I'm Canadian, so our Canadian elections is next year. But in the United States elections that is coming up, many CEOs have said that they wanted, of course, a Republican. Doesn't matter who it is, but they want a Republican winner due to the regulations, the red tape, ease of sectors, because each party has a, I guess, focus depending on what sector they decide on. For Alger, and even just for yourself, how much does politics play in your decision making? And is there a party that might benefit yourself in Alger more than another? Because you did say earlier that it's all about change and growth, and you guys will pivot and adapt. So, what are your thoughts on that?
So I will start with the fact that innovation doesn't know Republican or Democrat, right? So if
Good
you
point.
think about generative AI, it doesn't matter if there's a Democrat or a Republican kind of as the president. That train has left the station and the innovation cycle has begun.
Perfect.
And so we don't see the impact on the individual fundamentals of the companies. However, there are distinctive regulatory hurdles that may be different. The tax structures may look different, with the Democrats really wanting to take up tax structures on companies and the corporates and reverse some of the Trump tax cuts. And even the way we might think about the consumer, whether that's a low end mid-tier consumer, and what the Democrats will do versus the Republicans. So I think there are nuances to all of this. But when we think about growth and change, that growth has kind of been, set in stone from here. And may the slope change, the slope might change to get to that growth, but the end point's the same. So, I expect that just the election is going to cause a lot of market volatility in general, because I think there's going to be a back and forth of, taxes and regulatory issues. And,
Yeah.
can you do M&A? We haven't had a lot of M&A this year or the year previously. Will that engine start again? And, but again, I don't think any of our companies, I won't say any, I would say a majority of our companies will not be impacted directly.
Okay, perfect. And that's the sentiment that a lot of CEOs that I've also spoken to said. They said, doesn't matter who wins. We still have our game plan. We're sticking to our strategy. Every 4 years, you can't change your strategy drastically.
Right.
So it really doesn't matter who wins. And also, I also heard that once politics seeps into your investment strategy, that's when you'll actually lose gains and not actually maximize it. So I'm glad to see that Alger is not going to be affected by whoever wins or what party wins. As long as you guys stick to the strategy, I'm sure you guys will continue climbing the charts. So Dr. Crawford, so we're just gonna end it very, very soon. But before we do, is there any last points, anything that you would like to tell my awesome viewers about Alger, about yourself, maybe why Alger, any last points?
Yeah, my gosh. Okay, so I think one of the important takeaways about Alger and our philosophy is that in our philosophy of looking for big change, we are at the cusp of some of the biggest change that we have ever seen in our lifetimes with generative AI. And, it is difficult for the layperson to really understand until they do a lot of work. We have many published articles, a few of which I've written myself, that are on our website. I suggest that I would love for people to go read them so that they can educate themselves about the big change that we are going to experience over the next decade. I think we're at the cusp of the next industrial revolution. Why Alger at this point? Well, I mean, I look at my own career and would say that I feel like my whole life was built for this moment. I know
It
that sounds crazy, but if you,
sounds amazing.
I know, like, and it just it's fortuitous, right? If you the engineering and then the technology, I was the head of our technology team, and then a portfolio manager for a decade, and now we're here at the cusp of this technological revolution that is about to take us to new heights of growth and massive disruption across our world. So, you should look to Alger as being really the leaders of thought and investment thought process over this next decade. I've never been more excited about the markets and investing as I am today. Again, I would love for people to take a look at our new fund, Concentrated Equity, CNEQ. Um, yeah, and thanks so much, Jacob. It's been such a pleasure.
No problem at all. So my viewers, I will definitely have not only Dr. Crawford's details, but also Alger's details and also CNEQ, correct?
You got it.
CNEQ. So, my viewers, just make sure that you like and subscribe. As I said, I'm going to be continuously bringing you these awesome interviews with various people. So that way, not only can you make wiser investment decisions, but we're coming up in a little crazy moment of life right now. And as Dr. Crawford said, we're also on the cusp of the next biggest breakthrough. And it's not just one sector, it's pretty much the next industrial revolution. And this industrial revolution is not trains, it is AI. So Dr. Crawford, thank you so much for being here with me today. I know for a fact that you will be on my channel again because we would love to hear more of your insight. And today my viewers got amazing knowledge and information, not from your opinion, not only from your opinion, but also Alger's perspective as well. So Dr. Crawford, thank you so much. And my viewers, please like and subscribe, and I will check you out very soon. Stay ranting.